Hey, this is Chris from Mission Capital, and in today's video, I'm going to show you how to build the statement of retained earnings into your financial model. So I have another blank three-statement model here, and typically what I see is that to model out the retained earnings, we'll typically take the previous balance, so from the prior period, and then we add the net income from here. So the formula would just be, equals this here plus the net income, which is sort of standard. But what I'm doing in this model is actually a little bit different. If we take a look at this formula, I'm actually linking to another schedule below. I'm not referencing the income statement at all. What I'm actually referencing here is a statement of retained earnings. So let me show you why I do that. So let me scroll down to the schedule. Again, I keep all my balance sheet schedules below my three-statement model so it's easy to track. Down here I have a statement of retained earnings with the beginning balance, then plus the net income, but then less any distributions that I may make to equity. So let's just run through an example really quick. If I come way up back to the top, let me scroll up quickly. Let's just make up some revenue, punch in 1,000, and we have no costs. So that 1,000 of revenue immediately becomes 1,000 of net income. That net income is going to make its way all the way down to the statement of retained earnings here. So I started with 0, I had the net income, didn't have any distributions, and so my ending balance should be 1,000. And then in the balance sheet, you can see that 1,000 is there, and the change in the cash flow statement is reflected here. But in the next month, I may want to make an equity distribution, and that's not going to affect the operations of the business. So let me just show you that. If I come back to my schedule, this month, if I still got the cash in the company, I may want to make a distribution. So if I take out 500 in the form of a distribution, this is going to hit my balance sheet and hit the statement of cash flows. So you can see it goes from 1,000 to 500. So let's go back up. Now you can see I've got cash from financing leaving the business at 500, and the change in cash is 500 coming out. But if I go up to my income statement, there's no impact on the core operations of the business. So by building that statement of retained earnings, it allows you to make equity distributions that ultimately hit your balance sheet and hit your statement of cash flows without affecting the operations of the business. And that's why I like to build it as its own separate schedule as opposed to what I'll call the classic build of linking to the previous period plus the net income. So hope you found that helpful. Thanks for watching. I'll see you in the next one.